Hey everyone, Hana Cassis with the Stock Market Academy. If you've been following my newsletter, you know that one of my biggest goals and objectives is to help you independently identify trading opportunities. If you're signed up to my newsletter, thank you. You're probably curious to learn more. You're probably new to markets. You probably know me and trust me for advice I've given over the years. But my goal is to make you never need me. So I want to take you through an exercise and a really good opportunity in oil right now. And I'm going to tell you for paid subscribers how I'm actually taking advantage of this potential opportunity. So let's start here with the news. I just Googled oil supply and we see four major headlines that come up. ExxonMobil CEO predicts years of tight oil supply. That means price is going to go up. Oil prices climb $2 on strong demand, tight supply. That means price is going to go up. China May oil imports from Russia soar to a record, surpass top supplier Saudi. So the market, that just means there's a lot of activity in the market right now. People are buying from new people because they can't get it from old people. That's what happens when there's a shortage of supply. And then the last one from Reuters, surge in U.S. renewable diesel supply won't offset loss of petroleum diesel. Again, very bullish headline. But I'm a firm believer that if there's a lot of attention on a trade, it's probably over. And there is a lot of tension on the long trade. So that means I start looking to the short trade. So let's start with a simple chart. This is West Texas Intermediate Oil. And I want to take you through, there's something called confluence in markets, and that's when multiple technical signals line up. It increases the probability of the trade. If you watch my video I just posted before this about will housing prices ever go down, it's the same exact concepts, the same exact tools that apply here. It happened in housing a few months ago, and it's about to happen in oil. So let's go through the exercise. We first see this is a daily chart from the December low until today. And we see that the market kind of created a double top. We have, the high from March, and then it kind of faltered here. If you want to look at the momentum, remember, John Bollinger says use a momentum indicator when looking at Bollinger Bands. So we can see that it came up and hit a double high right near Bollinger, but it was on lowered momentum. And we also have, from the December low, a trend line break. It happened last week. So the trend line broke right here, meaning there are traders who see the trend line break. There are traders who see the double top, and there are traders who see the divergence in momentum, and they all act on it. And that increases the probability that the trade comes true. So from Tokyo to New York, there are traders that are seeing exactly what I'm seeing, but all the headlines are saying buy oil. So that makes for a perfect trade because of the Heisenberg principle. The less observed the opportunity, the better it is. So we have what's called confluence happening in oil right now. That's when the stars align between base technical indicators like price and Bollinger, pattern indicators like the trend line break and the double top, and momentum indicators. They're all confirming one another. So this is a daily chart. This only gives us about 6 months. So let's zoom out a little bit, see what's happening on the weekly. And this chart is kind of skewed because of the major sell-off when oil went negative during COVID. But let's draw that trend line. So I'm drawing the trend line from here to the low here, the trend. And you could see that price right here has been struggling to get back over it. It's been struggling. You also have a doji here, which means indecision on low volume. That signals a turning point. So price has broken the trend line on the weekly chart. It's broken the trend line just the other day on the daily chart, coming off of a double top with less momentum. So there are a lot of traders seeing this. You can expect that many traders will step into the market. Many people will sell oil. They will hedge their oil. And other people will just short it and try to drive the price down. Now, let's go out one level further. Let's go to the monthly chart. So here on the monthly, we can see that there was a sharp intra-month reversal in February or in March. And if this forms, if this candle sells off, so if it sells off a little bit more here, and we see it sell off in the coming days here, by the end of the month, if this forms what's called a bearish engulfing, you can expect prices to take a big dip lower, which begs the question, how low will oil prices go? Well, that's where Fibonacci comes in. As always, we draw our retracements and we say, okay, you can expect it to go to 84 a barrel, below that 69 a barrel, below that 54 a barrel. This seems like a very interesting level because it's also the high from the end of 2021. So remember, prior resistance equals future support. So this area, 84, you're going to see a lot of buyers step into the market on oil. Remember, when the media is telling you to buy and the charts are giving you a different story, who are you going to listen to? That's how you become successful in the market. It's cutting out the media, cutting out the bullshit, cutting out the analysts, eventually cutting out educators like myself so that you don't even need me anymore. Thanks for watching.